Morning, muchachos. Welcome to the Flow Show. Nice sunny day here. Oh, it's going to be a scorchio day here. And in my office is the last place I want to be at the moment, given the market moves going on. So I might drag my office chair out into the garden. Who knows? Morning, Kay. Got the old lotion on?
Um, Inside, no need, right? Yeah, let's call it a day. Let's go outside, go to the beach. Nothing happening anyway.
Yeah. Well, hopefully something will happen a bit later because we've got a ton of data coming out, which I
Oh,
want to speak about.
oh, and by the way, good morning, muchachas, because Ryan is a bit misogynist. He doesn't. You don't like women, or?
Yeah, I think muchachos is young boys anyway. So yeah, better stop there. Muchachos. Is there a female version? I don't know. Who knows?
I think muchacha is the female version, no?
Is it? I don't know.
I don't know, mate.
I don't know. You're the Mexican expert, apparently. So any Mexicans in? Let us know where we're going wrong. Otherwise, yeah, we shall leave it there. Right, let's get cracking. Oh, where should I start? I don't even know where to start today. Let's start with some data. How about that? And we're going to look at what's been going on in Japan. A little bit soft numbers coming in. Industrial production on the month for March coming in minus 1.1% worse than expected. There's been a little bit of softness coming in, softer numbers, shall we say, coming in. Some of the other data there. Oh, I'm missing it now. What else came in? Yes, the year-on-year industrial production down 0.3 as well, was expected to rise 0.8%. Bit of retail data as well. Retail sales month on month also coming in a little bit softer at minus 1.2% versus minus 0.7 expected and a prior 0.4 positive. Retail sales on the year, as you can see there, large retailers 3.0 versus 2% price. That's year on year a bit better. Also a bit better year on year for the main retailers, 3.1, but not as much as it did the 6. Oh, and shut me squawker. 1 second. There we go. Close that down. So yeah, so retail sales a bit humming and ahhing, industrial production a bit of humming and ahhing. There's no been outright collapse in the data, so nothing really to shake the BOJ, which is tomorrow morning. We shall see whether they pull a surprise hike out the pan or not. Over in Australia, we also got some CPI data, depending what you're looking at, because they've got their quarterly measures and monthly measures. It's all up, down, all over the place. So the main thing is the monthly CPI, which I think is probably what we should all concentrate on. That came in at 2.4% year on year, so that was unchanged. Was expected to fall to 2.2%. Now, in the other core trimmed measures as well, and these are more quarterly numbers, we saw a drop in one of them coming in at 3% from 3.5, and another, the trimmed, came in at 2.9 versus 3.3%. So some of the core measures coming in, or some of them quarterly measures coming in softer than expected, got the market thinking a bit more about rate cuts. But that headline 2.4%. Still unchanged and still on the sticky side of things for that. Do you think any of that data changes the RBA? I mean, they've made it clear that the May meeting is a decision or potential decision meeting. Do you think this pushes them into a cut, Kay?
Well, we are inside their target zone. That is one thing. There may be enough uncertainty flying around for them to give it a go. It is possible. Um, just like perhaps a token a token move. Of course, the market is going to react on it. But I was actually with those numbers just that surprised that the market was pretty keen on buying Aussie on the back of it. So I'm not sure what the reason was. In the meantime, we are again turning around that 64 level. Yeah, I think it's possible, mate, that they do something in May.
Yeah, as you say, not that the currency is taking much note of it
No.
at the moment anyway, but as we know, central banks are way down the trading important list at the moment. Over in China, we had some PMI data, both the state numbers and the Caixin private number. Manufacturing going backwards, 49 versus 49.7, so into contraction as expected, but a bit more than expected. Services number there as well, although also going back a little bit, 50.4. The Caixin number, that came in softer but didn't go into contraction as expected, so it's just floating, keeping its nose above the water. Coming into Europe, a ton of data out, GDP data, CPI data and whatnot. France kicked things off with a whopping, booming 0.1% GDP for Q1 2025, so the first quarter. The resilient and improving economy, that's all you get, 0.1% for that. Germany saw a bit of weakness in their input price index, down 1%, worse than expected. The other numbers coming in slightly softer. Retail sales disappointed, but not as much as expected, down 0.2%. Some more good news for Europe. France, CPI and HICP also coming in a little bit mixed. Not down as much as expected on the HICP, 0.8%. CPI coming in 0.5%, sorry, 0.8%, so all unchanged there on the year-on-year numbers. This is one of the countries that have got CPI well below 2%. So there'll be, that's why Victory Lap Villeroy is pumping more cuts, because France, low growth, low inflation, not a good cocktail. German unemployment change saw 4K added, not as much as the 16K expected. The unemployment rate stayed unchanged, although I think prior month was revised to 6.2, so that makes it up a pip. Italy GDP beat expectations, coming in at 0.3%. Again, not exactly booming. Swiss Zoo coming in a wonky one at minus 51.6 for expectations, and we also had the COF number also coming in lower early on this morning too. Regional CPI numbers from Germany, a little bit all over the place, some up, some down. Baden-Württemberg up 2 pips, Bavaria down 2 pips, Brandenburg down a pip, Hesse down a pip, North Rhine down a pip, Saxony down a pip. So not really getting, most of them going the right way, getting near that 2% mark. But these numbers can be a little bit flaky. We get the pan-Eurozone or the pan-German number at 1 o'clock today. Oh, this bloody data getting on my nerves. Italy, their CPI numbers as well, HICP coming in unchanged, was expected to rise. Their CPI also went up a pip to 2 from 1.9% as expected. The pan-Eurozone GDP number coming in a little bit better, 0.4% versus 0.2 expected on the quarter. K, not so much front loading going on, it seems, in these GDP numbers. Certainly doesn't seem like they've been rushing to get stuff in the door.
A little, we may say, but yeah, not what we may have expected that they would do. So yeah, it's exactly as you say. And sorry, again, now once we had that, how is this going to work in Q2? That's going to be the big question when effectively now we have all those talks and tariffs and stuff, and are those numbers, are we going to see yet another maybe meltdown or at least a slowing just because of the uncertainty. Inventories may have told us that the number would have been a bit higher, but no, surprisingly not. I'm actually relatively surprised that the expectations were still so low that they did not include this front loading and stuff.
Yeah. So what I mean, what's it going to take? I mean, you know, we get some ECB members saying that the economy is resilient. It's going to start improving. It's been shit for over a year, probably 2 years now. And even if they get a deal with the US, is it really going to boost growth? I mean, are we going to start seeing, you know, 1-2% growth numbers in Europe, or are we facing yet another year of dragging along the seabed?
Well, I think if you look at the overall plans that that they have, assuming that we are not going into a full-on trade war, but that things get slightly or sort of resolved, I'm actually hopeful that at least they can get away from the flat mark. But is Europe going to grow at 2.5%? That's going to be a big ask.
Yeah, I'm not hopeful. I'll give you a clue. And that's,
Mm.
you know, when we do finally get back to just trading the fundamentals, that's still a reason why I think the ECB are at risk of cutting further than they want or expect. It won't just be on the tariff stuff. If that gets resolved, I still think the economy is going to be crap for the rest of the year, but we shall see anyway. ECB's Stornoas says rates are likely to go down to 2% this year, but should be cautious on further cuts. It has been a bit of a dove recently, so that's a little bit of an easing of that rhetoric there. Right, coming back to yesterday's data in the US. Not scrolling needed today. Where are we? There we go. So we had here we have another indication of what's going on in front money. The goods trade balance coming in at a much bigger deficit than expected due to those booming imports. So this is where we are seeing a lot of that front running. Where's all those imports going? Well, a lot of them are going into inventories. As you can see from these numbers here, retail inventories up 0.4%. Wholesale inventories up 0.5% as well. So it's all getting loaded up in the US. House price data from Case-Shiller and FHFA, no real problems there. Did see a bit of softening year-on-year numbers. The FHFA 3.9% versus 5% prior. The S&P Case-Shiller 20 city number 4.5 versus 4.7 prior, and the national number, which I don't think it shows on there. No, it doesn't. Good job, I noted it. So the national HPI number came in at 3.87% versus 4.09% prior. So a little bit softer there, but still house price growth is still going on in the US. We got jolts out as well, not unexpected to see softening in those numbers. 7.192 openings available, less than the 7.49 expected. But again, a bit surprising under the hood. Layoffs actually went down to 1.558 million from 1.70 million previously. The quits level went up 3.332 versus 3.153 expected and 3.2 previously. So quits are one of those indicators that can show people willing to change up jobs. But anyway, layoffs going down suggests that the jobs market's still not quite ready to roll over just yet, but firms looking like they're a bit more cautious in putting out vacancies. Conference Board consumer confidence came in soggier than expected, 86 versus 87.7 expected, and the 93.9 prior. The only thing that was a bit of a surprise, or not surprise, depending on your viewpoint, 1 year inflation jumped to 7% from 6.2% previously, the highest since November 2022. So those inflation expectations still ramping higher. Current conditions went down 133.5 from 134.4. Expectations also dropped to 54.4 from 66.9. So soggy set of numbers from that sentiment data. While we're on the jobs front, UPS is apparently going to slash 20,000 jobs due to what's been going on at Amazon, them downsizing operations. They were also looking at around 15,000 job cuts themselves in the early part of this year. So we're starting to get some bigger numbers dropping through in terms of potential layoffs. That's something to watch for in tomorrow's Challenger layoffs report. Lutnick, he was out and about yesterday, just dropping details on tariff offsets and further details of what's happening with automakers and what they're going to have to do with parts and whatnot. I won't go into the nitty gritty. Long story short, he says automakers will pay either steel or auto tariffs, whichever is higher. He said a 10% tariff is virtually not going to change prices. US Trade Representative Greer says Europe is not engaging well on tariff talks. No surprise there. Trump, he was having another little dig at Powell. He said that the Fed person is not really doing a good job. And he said inflation is basically down. He says, I want to be nice and respectful to the Federal Reserve. I'm not supposed to criticise the Fed chair, but I know more than the Fed chair. So he's not going to dig him out, but he dug him out anyway. Over in Ukraine and Russia, Putin, according to reports, wants or is demanding 4 Ukraine regions. He wants to keep 4 Ukraine regions as part of any deal, and he's bringing that up in their talks with the US. Going on to just a little headline that I picked up, missed yesterday. This Spain power outage that happened knocked out Spain and Portugal earlier in the week. Well, the UK was hit apparently by unusual power activity hours before that blackout. Folks running plants in the UK had a couple of outages, both in the UK and in a line that came from Denmark. So potential problems in Denmark that hit just before that Spain stuff. Get your tinfoil hat on. We know that potential shenanigans is one possible cause for all this going on. We know that Russia and China dragging cables and doing all that sort of crap. So you wouldn't rule it out, although the investigations are ongoing why that happened. But suspicious activity in the UK just before that Spain blackout. Make of it what you will. Kay, got anything else, mate?
No. Moving on.
moving on very quickly. Right, I want to look at today's GDP in the US, because for once it's actually going to be more important than it usually is. So we're in this mode. We've been speaking about it for weeks now. The market is waiting for soft data. It's waiting to see the impact from all this tariff stuff. It's waiting to see the impact from all this trade stuff and this front loading or whatever. We are probably going to see a bigger reaction here to all that front loading than we've seen in Europe today via those GDP numbers. So what's expected? So GDP is expected to come in at 0.2%. Okay, so that's running quite below some of these models. Well, depending on which one you're looking at, the Atlanta is a negative, the New York and the St. Louis are positive numbers, but how that all translates, I don't know. But anyway, this is the number to look at, a quarterly number, annualized 0.2%. Okay, now a lot of people are looking at that trade data and saying that it could make it a big negative number today in GDP because imports offset exports. If imports are massive, then it's a negative drag on growth. Okay, but there's two sides to the story. So I'm going to explain it a little bit. GDP is counted on finished products, okay, not intermediate goods or services. So that's when you buy a part, bring it into the country from elsewhere. If it goes into a product that then sold, that's counted as GDP. So the issue we have today is, yes, there's a case to say GDP could show a negative based on those big imports that we've seen. but it depends where those imports have gone. If they have gone onto warehouse shelves and are just sitting there as stock, then that's going to be a negative. If it's gone down the chain, i.e., let's use an example, I don't know, clocks. Let's say a clock producer has imported tons of hands from China to put in his clocks. If he's made those clocks, put them on the shelves, and they're just sitting there waiting as stock, then it's going to be a negative for GDP. If all his clock customers, shops, whoever, have bought those clocks and they're stocking up, then it's a positive for GDP. So it's not as simple as a lot of people make out in terms of what the impact is going to be for GDP. So long story short, be open-minded. We could get a negative. It might not be a negative. The market's going to react probably either way in those numbers. Okay, if it's a negative, the market's going to go, yeah, that's shit, but it's likely to do with front running, so it might not spank the dollar as hard as if it was a normal fundamental drop in GDP. Conversely, if it's a positive, then the market's going to say, okay, great, it's a positive number, but now is that going to drop off in Q2 because it's all front running and everyone's done whatever. So there's all different ways to look at it. So I'm going to ask Kay the question, how do we trade it?
According to Atlanta Fed GDP now, it's going to fall off a cliff. How do we trade it? Well, okay, and we can't forget, obviously, that we still have those last hours of the month with whatever flows may show up. I think for a change with that in mind, we could have perhaps a small, bigger reaction on a positive number, because a negative number is very much expected. So anything really positive, and let me just go on to the data. What are we expecting? Flat.
0.2.
Yeah. Okay. I mean, it's gonna be touch and go to know whether it's above or contraction or still a small positive. And I also would like to say it's going to be taken in the context of what's to come later this week with the NFPs. And as you say, a number here, I think for the immediate reaction, a positive number is, it may see a little bigger reaction because the market is expecting a drop-off. On the other hand, if it's a real negative number coming out below zero, and then it's probably in a second reaction going to be quite negative again. So I think we could have like a double reaction in waves coming, with the dollar perhaps doing a bit better, but then already with an eye on what's going to happen on Friday. And as you say, okay, that was Q1. Q2 with all the tariffs and stuff is going to have a completely different look. So yeah, it's going to be binary, but in two different waves to me. And I would not be surprised to see a slightly better dollar, but then reversing again. Unless it's, of course, coming in very negative. Then I think close your eyes, because as I already said, I think the market is going to front run a bad NFP number come Friday.
Yeah, I think I can agree with that. And yeah, I don't see too many outcomes where we see the dollar rising sustainably. But then, but then we're all of a sudden we're in a situation where trade tensions are potentially easing. If deals get done quicker, it's going to limit the negative impact going forward. So as usual, we're spinning lots of plates in how this number can come out. But yeah, it's really take it. I don't see many reasons why the dollar rallies. If it's good numbers, the market goes, okay, but that won't last, so we're going to sell it. If it's bad numbers, as Kay says, there might be a bit of expectation in there already, but if it's really bad, then the market's going to go wallop. But keep an eye on the components as well, like consumer spending, like sales, because they might give us an indication of if there's a big move in GDP, what's moving it. If the consumer's still strong, if business sales are still strong, but other areas of GDP to do with imports and exports make it a weak number, then the market's going to look through that a bit. So lots to take into account for this one. After that, we do have PCE, but this is one of those funny months because Q1 PCE will include estimations of this data. But again, this has been blown out the water probably by Powell, who reckons it's going to come in at 2.3 on the headline PCE number and 2.6 on the core. If he gets this one right, he will be 3 for 3 in telling us what this PCE data is.
Actually, we may get the GDP before it's released, right?
Yeah, well, no,
If
people will extrapolate the PCE out of that GDP report. Correct.
Yeah. No, but I mean, Trump can give us the number, but he'd rather give us NFPs on Friday.
Yeah, we'll have to wait and see if he does his little dance again. So we get PCE, but it might be a bit null and void by that point, unless something in the GDP indicates that these numbers are going to be out of whack quite a bit. So that's the data coming up. As I say, hopefully it gives us a bit of volatility because we've got absolutely zero at the moment. A lot of charts all showing the same sort of picture, a bit of flatlining going on, no price committals any which way. Euro dollar still stuck around that 113.5 area, has a little mooch into 114, has a little mooch down to 113, and it doesn't go anywhere after that. I think, Kay, that maybe the best way to look for trading today is to see if you get any moves outside of these tight ranges, that things revert back to that range afterwards.
Yeah, and well, we never know the data, right? And the equity markets have moved, so we don't really exactly know what the last bit of the month end flows maybe, but let's hope for some volatility. And what I was thinking today is if the models are still kind of right, and if what is happening right now sees a bit of continuation. We know that for the best part of April, we've had a lower dollar, even with higher interest rates, right? With higher yields, lower bond market. And we are seeing a bit of a reversal of that, meaning that the dollar is doing a bit better. If you look at the euro is back well under 114, dollar yen is up, cable is slowing down as well, coming back down, Kiwi and things like that. Even looking at the metals, they are coming down. I think we are in a bit of a rebalancing mode and of what we have seen for the better part of April. And that's why I was thinking that a better number could accentuate that a little bit, this rebalance. So I'm looking at two things. If the number comes out a little better, I would not be surprised if we go and have a look at the lower end of the ranges, euro dollar. But I'm not saying the range that we are in now, not like 113.30 or so, or 113.20, but even have a look perhaps in the big figure below into 4 p.m. or so, and then after that probably see a stop and we go back the other side. Of course, if the number comes in really negative already for Q1, then I think there's going to be a lot of speculation that Q2 is going to be even worse, and then I reckon we are not going to be able to sell dollars at a decent level. That's kind of how I look at it going into the afternoon today.
Yeah, euro dollar. I'm looking to say I'm still parking my buses potentially 112, 115. So if we do get big numbers, we might get either side seen on that range, and I'll be interested for that as well. But as I was just looking at, we got yields, 10-year yield breaking down a little bit. We're down below 420 again, and as you can see, it's going the opposite way to which dollar yen's going the opposite way to which yields are going. So you can see that that correlation is completely the other way at the moment. This is more a US risk trade, as Kay pointed out. dollar yen, we're up through 149. Another hold of that 142 yesterday afternoon. So that's building a case even more so that we've got a stronger bottom down here than perhaps we've seen more recently. But 144, 145 are still the main levels above. And if we can't get through there, it does keep the overall picture bearish. It's still very bearish for the year until we start taking out some of these fibs. Then there's no reason why this trend should be changing, except this down here. So keep an eye on this. We're still bearish, short term, longer term, but there's a case to be made for a stronger bottom coming in. I'm going to use my old line. Given all the data we've got this week, I think where we close in this one come the end of the week is going to be important. If we're still above 142, then I think we're going to be heading a lot higher, probably up through that 145 area. Oh, and not forgetting the Bank of Japan. The Bank of Japan might be the last chance to grab a dip. Okay, I've missed it twice, and he's going to probably third time unlucky.
Yeah, as you say, I've got an idea about how to perhaps trade euro dollar cable also. I would be interested in seeing a decent dip come the end of the month. But yen is a bit of a different animal, right? Because we have the Bank of Japan upcoming, and I think you're spot on in saying, look where we are on Friday. Okay, we may have missed it. Or it may be a miss already. I mean, we're already trading 145 if we got another surprisingly good NFP report out on Friday, and the Bank of Japan doesn't do anything. But imagine that we're going for a revisit 142, even below, and then you come into Friday and you've got the NFPs, and after the NFPs we're closing the week above 142. That may be quite a signal for the yen indeed. And again, it's looking at my overall bias for the dollar. I may look at stuff again in the yen crosses, because depending on that NFP, risk is going to move as well. And if it's not as bad as expected, yen crosses may rally a bit.
Yeah, I'm thinking I'm going to have to either end up chasing this. I think I'm going to drop a few bids in dollar yen back down near that 142, maybe even down to 141, down to that level. Just dropping some small little bits and bobs, just in case the Bank of Japan pull a surprise one out. Yeah, because I'm feeling a bit more bullish on this one than I was, but I want to make sure I'm not doing a bit of FOMO and just trading it for the sake of it. So be watching the price action as well. I don't know what to look at next. Dollar CAD, same story, flatlining, still looking like we may be trying to hold below this 60-70 level for now, but this is still all short-term stuff at the moment. A lot of going sideways. We had a little look down towards the 138 figure again. It held there. So yeah, we're a bit like euro dollar. We're happy to move in around this sort of intra range, 138s, 137.80s up to 139 and a bit, but not ready to commit to go in any direction at the moment. Aussie dollar, I don't know why I had that little rally up this morning. You get that as well. Maybe there's some fixed stuff going on. Who knows? Maybe some election trading. I don't know. But we're finding a bit of resistance into this 20-30 area still. We had a rally there, couldn't hold it. Now we're back below 64. So again, it's getting to a point where it's shit will get off the pot for this one. Either it's going to break higher or we're likely to see a steeper pullback. Whether that's can get us down to the low 63s is another question, but I wouldn't be surprised to see us down 63.30 if buyers give up here. But going to be interesting to see how another attempt, if we get one on the 64.40, happens. If it happens over a data point like the NFP or whatnot, I probably won't trust it too much, to coin our mate DKT in the room. Don't trust anything. Apart from that, not a lot else going on at all. I'll have a quick look at oil, because I know some of our bods are looking at this one in the room. we had this big break finally through all the support, this big support area here, and pretty much held on a retest yesterday. I hope Mark's not watching, because unfortunately he missed on his short on that one, and now it's coming all the way back down again. So this is still remaining very bearish, which again goes towards the fundamentals that the market's still looking a bit weak in terms of demand, and OPEC also, OPEC Plus and all them cronies potentially looking at further increases, output increases. So that's not going to help the price either, but still a bearish one there, which also takes a bit of inflation pressure out the pipe as well over the months ahead. Right, Kate, bringing it over to you, mate.
Right. Just quick look at what's happening in the metals, because it's going under the radar very often, and I just will repeat what I've been saying nearly every month now. There are month-end flows also in the metals. There are also people needing to rebalance positions in the metals. There is obviously risk. There is obviously a lot going on. But if you look at gold and silver right now, today, you could argue that with lower interest rates, they should be higher, and they're not. So this is what we are seeing now in the whole thing. I think we are in rebalancing mode here, and we will wait for what is happening on come the GDP. And I'm really willing to sit the rest of the day out in all those metals. I know we are on a support here in gold, but I'm not ruling out anything before the end of this day. Okay, and I will see where we are around the close. Globally speaking, I still think the party is not over, and we will find demand somewhere, but players, bigger players, whatever, they know what is going on in this market, and if they see, or if they think that they can get stuff lower, they won't go and just simply sit on the bid here at a support line. They will wait. Okay, let's wait and see where gold, silver end the day, and especially silver got a big setback. And we know this market is, for one, is smaller, for two, needs a and I've been saying that already a good number of times as well. For two, needs a kind of a better global picture to outperform gold. But I think the both things now, we are seeing, or we are expecting a much lower GDP in the United States. We are ahead of the jobs reports as well out of the United States. And I think there's this rebalancing as well going on. So I'm not going to touch this for the time being. I know that we are getting close to support here as well in the low 32s. But I myself, you do whatever you want. Could be the trade of the day of or the trade of the week to buy these supports. I'm just saying that there is still perhaps rebalancing to be done, so we can perhaps get this one a little lower if you want to buy it a little lower, or be careful if you buy right on the support. That's just what I want to say, and then we will see where we are at the end of the day. Ali is making quite a fair point as well on gold. Is with China being out, we may see less demand for this month, and they are off tomorrow. Tomorrow, are they off tomorrow as well?
Yeah, they're off for a few days, I think.
Yeah, they're off for a few days, right? Yeah. Labor days. Yeah, so that indeed can reduce the demand as well for gold. Fair point. Hence, I'm going to be a bit cautious, meaning I'm not going to touch too much of this right here and now in either one of them. But if I really see an outside move, and I mean an outside move is going to take us down to well into the 3100s, right? That is maybe going to raise my antenna, because there's also support coming in at the low 31s as well. But those are the kind of moves. Before that happened, I'm just going to monitor whatever is going on, but not really going to get involved too much. Cable, well, we are in the range, right? We're turning around this 133.60. Also, I might say relatively as expected, in the middle of the range right now. Keep an eye on what's happening around 132.90, 133, the figure. It could all be possible again. I am personally looking for something like that to get involved again. It would be really great if they do 150 points, but who knows, right? I mean, reasonably, I think 133, 132.80s or so should be somewhere bottomish. And obviously, watch out if we break again at some point today. If we break again over 134, 30.40, I think we're on for a bit of a flyer, and that could take us initially up into the 135s and 135, 10, 20, 135, what is it? Around 80s, 70, 80s or so. But I mean, if we break those highs, this is just a line, in my opinion, around 135, 60, 70. We may be on our way to 138. It is kind of the move that I'm going to, or that I'm still thinking that is possible. Where am I completely wrong? I think once we start to break below 131.5, and then obviously below 130 is going to be end of the party, and then we go back down. But I'm still looking at, in the broader scheme of things, that cable could actually push a bit higher. What else? What else? What else? Yeah, euro dollar. You already had a look at the euro dollar, right, Ryan?
Yes, mate.
Yeah, okay. So the one that is interesting as well, and yesterday we saw a bit of activity there as well on the Swiss at some point in the day got a little bit. This is one you're going to have to trade with risk depending on what's happening in equity markets as well. But look where we are trading. We are trading, I think, around a bit of a hinge here in this 82.65, which could mean 70, 80 to 100 points above, or if we bang our head against it, the same 70, 80, 100 points below. So keep an eye on where we are post data also, and into the 4 p.m. London fix in this dollar Swiss, because that one could get a little bit interesting. Okay. And Ryan, with that, mate, I'm going to pass it over to you. I'm basically watching to see if I get levels of entries, and just for information, I'm traveling extremely light right now.
Okay, mate. Yeah, thank you very much. Yeah, there's not too much to talk about. Ali, Euro Swiss. Let's have a look at that one, because I'm still running a position in there. Though it's looking a little bit softer than it has been of late. Again, not doing an awful lot. We've had this rally up. Couldn't get through this 94, 35, 40 area, this 50 fib mark up here. So that was the level that we've been pointing out, been pretty strong. We've have had quite a decent pullback, but it's still holding up. But it needs to get back into 94 and move on. Ali, if you're looking for trading another pair because you're chasing volatility, it's the same situation. You can try shorting up at 94s, the same as trying to short up near 114. There's no difference in it at the moment, but keep an eye on what the dollar's doing, because obviously these pairs can, Euro Swiss and Euro dollar, can be at odds with each other if the dollar's moving and dollar Swiss is going. So keep all those crosses in your mind for that one. A couple of things to point out. I've just put in the chat room. or rather in the Zoom chat here, link to the NFP competition. If you want to take part on that, win some wonderful prizes, have a guess, read the rules, where to post your guess and all that sort of thing. And just a heads up, on Friday, anyone in the London or surrounding area wants to come for a little drinky poos, I'm heading up to the Big Smoke on Friday to meet Ryan from Peak Suite, Mr. Brown and a couple of other bods, a couple of our roomies as well, for a few beers down by the river. Details there if you want to join us, if you're around and about. It's open invite. You're more than welcome. Kay, you come in, or you made a decision yet?
No, mate, I'm not going to make it this time. Maybe another occasion. Hey, somebody's got to watch the NFP.
I'll be watching it on the train. Yeah. Yeah, so there may be a delay in sorting out the winners for the NFP competition, but I'll take care of all that at some point over the weekend. So don't start screaming if you haven't heard from me, because I'll probably be a few pints in. Anyway, that's it for today. Don't forget, last knock-ins, while we're talking of last orders coming in for our 40% discount on our platform. That's going to be ending very, very soon, this weekend, I think, if I'm not mistaken, or at least in the next few days. So this will be your last chance to grab a decent discount. On that note, thank you very much, everybody. Trade safe later on. We'll see you later. We'll see you tomorrow as well. Cheers, Kate.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.